Everyone, this is Ben from Cheddar Flow, and you already know what we're going to do today. We're going to do our flow recap from last week, which also gives us predictions on what might have continuation the following week. So I'm going to go right into it here. We have the first ticker that I want to look at, which is in our flow overview tab. This is a great way to figure out like what had a lot of bullish flow last week and also bearish flow, top sectors, and the most active sectors as well. Tesla right here, which I want to go into right away, is very, very bullish. Now, we can see the flow here was really, really good on Friday. It continued to have good flow throughout the entire day, which is also another bullish thing. It wasn't just straight out of the gates, bullish flow, and then kind of like settled down later. It actually had a really strong day throughout the entire day, which shows a lot of strength. So you can see here all this good flow, and it's just continuous all the way down, which is incredible. How many contracts were traded that day? No surprise that the bar is all the way out here. $28 million in premium was traded for unusual premium here. And if we look at the chart over here, we'll just type in Tesla. This has been showing a lot of strength. And actually, this past week, we broke out of the channel we were in. So right here, you can see this lower line is a support, which is going up, and this is a resistance going up. So this is an upward channel that we were trending in. So every time it hit the top resistance, it would fall back down, test the support, and it bounced in between here until this week we had confirmation that we broke out of this, which is very, very bullish because the weekly is not only above this line, which shows that it's bullish, we also have a bullish engulfing candle, which is a full green candle here, which shows a very high probability of continuation throughout the following couple weeks. We may get a pullback and retest this line next week, but as of now, this is very bullish for continuation, and honestly, this could test close to all-time highs just based on how bullish this is. So it seems that the flow is pointing in that direction as well right now, so we are going to have to watch this for the next couple of weeks, see if the whales are buying the dips, and that will give us a good idea of what is to come, but definitely keep this one on watch. The next ticker I want to go over actually is not a traditional ticker. It is actually VIX, the VIX, which is the volatility index. Basically, for simplicity's sake, when the VIX goes up, the market or the S&P 500 goes down. It's not always that case. There's a lot more math involved to it, but for simplicity terms, this is what happens. And on Friday, as you can see, we had a lot of bullish sentiment on the VIX. So what does that mean? That means there could be potential downside in the S&P 500 next week. So right here, we're seeing actually some pretty hefty prints, 4.2 million in premium right here for a split, another 2.7 million. This could mean that there is downside to come next week. I personally think that there is more downside to come for the S&P 500 next week. I do not think we're out of it yet. Chart does look bullish, although you have to look back. If we go right here really quick, we have to look back a little bit more long-term to see where we are right now. So the weekly did break out up here, but we are still below this wedge that we had going on. So right here, this is the top resistance of the wedge and bottom resistance. And this has been going on since the bottom of COVID. So you see, it's just like Tesla, which I showed you right there, but a lot longer of a time frame. We've been bouncing in between here for quite a while and actually broke down below, closed below on the weekly and monthly candle, which is very bearish. We have to notice that we are in a current bearish state. Best case for bulls, in my opinion, is we retest this trend line, which would be close to all-time highs. Then it would decide if it wants to get rejected and fall back down. That would be the best case. As of now, it seems that institutions are hedging prior to this next week that we are having right now. We will see what happens, but the VIX is a great way for big whales to hedge their positions, which basically means they're planning on a potential downside catalyst in the future, and they want to make sure that all of their long positions they can hold, because if they start selling, then that's going to lead to even more downside pressure in the market because they hold so much. If they add to the VIX, they could actually make money off of downside near term, and they're not getting hurt as much in their portfolio because they're making money on the difference from VIX. So this is an interesting tactic, and it's interesting to see that all these people are buying it. Contracts here on Friday, a lot more than normal, so it's definitely going to be something to look for. Again, we did have a very bullish week, could mean to more upside, although we do have to be very, very careful with the VIX like this from this past week, so we will be watching that. The last ticker that I want to give you guys today is CRM. I actually did give you guys this a few weeks ago, and it did work out really well. If we look at the chart so far, I gave you this ticker around here this last week. I said wait for a pullback the following week because I thought we would make the cup and handle pattern. If you remember that, right here we have the cup and the handle just formed in the last few weeks right here, which I predicted in that video. And the flow is telling us around this range that we had a lot more upside potential. We saw good dark pool prints, which I'll show you right here, over 170 million for dark pool print, which is crazy for CRM. Like, that is very unusual to see. 50 million even is really good. So we're seeing that right here from this past week on Friday. And as you can see, we broke out. Actually, we held all-time highs on the weekly candle, which is very bullish this past week, and we're above this last trend line right here. So as for this week, will we see continuation? We could definitely see continuation. This is very strong right now. Market does have to be green for us to actually continue up, but I want to play the pullback to retest the level. So this line right here at roughly 284, I want it to tap around that line again, because stocks that break out, especially to all-time highs, tend to retest the breakout level that they had. So in this case, it would be roughly 284. Once it tests this level, I want to check the flow and see if the bulls are very bullish on the potential for it to continue up, because if it does continue up, this will make a massive move. Trust me, a cup and handle, this textbook that looks like this, that was this predictable as well, that broke out to all-time highs, is a very, very bullish setup. You may call me crazy. I think we can get this to 350, assuming that the market is green. If the market's going down, kind of like I'm predicting it might, then that would be off the table. If we continue up as we have been, this thing is ready to crank. I want to follow the flow on it, but dark pool prints have been insane for the past week. If we look at historical flow right here, we'll just look at CRM really quick. You can see what I'm looking at, but basically, like, look at all of this. Really, really bullish flow for it right here. We're seeing a lot of good dark pool prints. Like I said, another over 100 million. I'm assuming these are buys. They could be sells. Remember, we never know with dark pool. Although, based on the chart setup, it does look like it's very bullish for the future. We're definitely going to follow up with this one, and I'm holding quite a bit of contracts on it, so we will see what happens. But also, make sure you minimize your risk as much as possible with the potential of market downside. Because remember, S&P 500, I am worried right now where we are. Right now, it does look bullish, so we could continue up for maybe another 2 weeks based on this bullish chart analysis right here. But characteristically, the 18th month or 18th day of the month has been bearish. If you look back throughout history from this past year, almost every single 18th day of the month has been red, mostly throughout each of these pullbacks. So actually, I'll show you right here so you can see. If we look on the daily, if you go back to each of the 18th, right here, this was the 18th of July, the 18th and 19th of August right here, also down. If you look back over to here, 18th of June, also down right here. And you can see around this range, we were also down in May 18th right here. So very interesting to see we've been red on all of the 18th, which brings us to Monday of this week. We are going to be worried about that. And also Tuesday is, I forget how many years it is now, but I think it was like, let me think. I don't remember exactly how many years it was. I think it's like around 40 since we had the 1987 crash. I can't do the math on the spot here, but basically that is an interesting day because everyone remembers Black Monday was quite the scene, and to see that it's been that long since then, days kind of mix up. It could make algos a little bit more bearish on that day, so it's another thing to watch for. But otherwise, we'll be watching the flow, see what the whales are choosing, especially for the S&P 500, because that will give us good direction on other individual stocks to pick. And otherwise, hopefully we have a very profitable week, and I will see you guys in the next video.